You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 28th day of June, 2022. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts each and every day. The first live broadcast is for members only and those who are taking our 1-week free trial. That's from 9:30 a.m. to 11:30 a.m. Eastern. Then we take a 30-minute break and we come back at 12 noon Eastern and we do a recap of everything that happened in the live training room. Plus we go over the Logic 247 alerts, the concierge trade alerts, and of course at any point during the broadcast, if you have a question, all you have to do is simply type it into the question box. Now, there are 2 ways to join this afternoon. There's only one way to join the morning broadcast. There's 2 ways to join the afternoon broadcast. The best way, you can go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Or you can go to eminitrainingschool.com and the afternoon link is posted there. What will happen is you'll go through a 30-second registration process. After that, you don't ever have to register again. The way it works is right before the afternoon broadcast starts, you'll get an email. In the email, there's a link. When you're ready to join the broadcast, all you have to do is click the link in the email. Now, why is that the better way? Because it gives you access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, on the run, or on the fly. You still want to join the show live? You can do that. Just point any internet connected browser to youtube.com/CFRN. Easy to remember. youtube.com/CFRN. Not only do we broadcast live each and every day, we also archive every daily live broadcast. Currently there's over 2,000 daily live broadcasts archived for your educational and viewing pleasure. So with that out of the way, let's open with a word of prayer. And today our prayer, it's about remembering who we as believers are in Christ. Psalm 5:12 says, "Surely, Lord, you bless the righteous. You surround them with your favor as with a shield." Injustice is a stripping, helpless feeling. Sometimes people simply don't like us for no real reason. Attacks or slights against us can be incredibly hurtful, unfair. But instead of getting caught up in the drama of the situations, it's important to remember who our enemy is and his goal. Psalm 5, written by David, is an emotional plea for God to intervene in hard circumstances. David, at this point in time, is desperate for God's help, and he prayerfully recalls the character of God as he empties his heart out to God. This lament, as it's called by the NIV Study Bible, is the psalmist's cry for help when his enemies are spreading malicious lies in order to destroy him. Get a lot of that on social media these days. David so often did this, emptied out his heart to the Lord. In dramatic detail, he was unafraid to pour his soul out at the feet of God. His confidence God would hear, see, answer, and restore him was solid. Often when David cried out to God, he received a reminder of who God is. Our circumstances change, but God never does. We are right and wise to pour out all of our drama to him. In that intimate connection with him, we find a safe place to run and a place to be reminded of who God is and who we are in Christ Jesus. The intense reality of our enemy is that he seeks to kill and destroy. Jesus, however, came to give us life and life more abundant. John 10:10. We can step out of those circles of injustice and persecution by going to God in prayer, just as David did. It won't always undo our situation, but it will most certainly give us the perspective we need to get through them. David wrote in Psalm 5:11, "But let all who take refuge in you be glad. Let them sing ever for joy. Spread your protection over them, and that those who love your name may rejoice in you." So you see, David not only prayed for himself, but for all believers. Something we should do. Now, we said to remember who the enemy is, but more important, remember who God is. Remember Jesus and the power of his victory on the cross. Remember the unimaginable strength of the Holy Spirit residing in us. Follow his lead by prayerfully seeking him in his word, especially when you're under attack. The enemy will use weak moments to sneak into our vulnerabilities and cause conflict based on lies, which results in isolation. Be aware by remembering God daily. We can't always see what's coming at us. We don't know what's around the corner. But the good news is God goes before us, preparing the way. When we seek him to prepare our hearts daily, he is faithful. When we run to him in moments of attack and injustice, he is faithful. When we are the ones who get caught in a weak moment and unjustly attack the character of another and run to him to confess and repent, he is faithful to forgive and restore us. Remember, our compassionate God. Choose to forgive forward. That was a great movie, Paying It Forward. I think that was the name. Unfortunate what happened with the actor that was in that movie, but doesn't take away from the fact that was a great movie. Pay it forward. So remember, when trouble comes, and it will, run to God, who is always faithful, always forgiving, and always fair. Pray with me. Heavenly Father, the world is just ridiculously hard sometimes. There are days we feel attacked for no reason. Please give us your perspective in those situations. Help us to see others through your eyes, not through the sneaky lies of the enemy meant to stir us up against each other and break us apart and send us into isolation. Remind us, God, that no human being is perfect, but you are. You are unchanging, ever present, and everywhere, and all-knowing. You are love, mercy, justice, forgiveness, compassion, and goodness. Father, this is who you are. You made us in your image and have given us a purpose and a calling that draws us to you. When our character is attacked and we are tempted to be offended and unforgiving, open our eyes and soften our hearts to hear and embrace who you say we are. Filter out actions, words, and thoughts through the truth of your word, through your love. May we be quick to forgive, sensitive to love others, and prayerfully lift up those who unjustly and unfairly attack us. In Jesus' name we pray. Amen. And everybody said amen.
Amen.
Hey, there you are. Let me give you guys the numbers from around the world. And then Valerie is going to pop in and do the recap today. Starting here in the U.S., with cash markets, or the indices as they're called, the Dow's down 219 points. The NASDAQ is down 233 points, which is over 2%. S&P 500 down 45 points, over 1%. And the Russell 2000 is down 16 points, almost 1%. And the commodity basket, crude oil up $1.25, trading 110.82 last. It's a gain of over 1%. Gold down $2.30, trading 18.2250 last. Silver down 32 cents, trading 20.84 last. That's a drop of 1.5%. In the Asian markets at the close, Nikkei posted a gain of 178 points. The Shanghai rose 30. The Hang Seng rose 189 points, which is just shy of 1%. In the European markets at the close, FTSE up 65, almost 1%. The DAX up 45, and the CAC up 38. So, that gave us a green day in Asia, a green day in the UK, but so far, it's a big red Radio Tuesday here in the US of A. So with that, we'll go to Valerie. I was going to call you Vikel. We'll go to Valerie, get a recap of everything that happened in the live training room this morning. And feel free to take your time, Valerie. I got a phone call I got to make, but I'll do my very best to be here when you are done.
Okay, great. Let me go ahead and take the screens.
Okay, I see your screens. I see your charts. I can see everything.
Good
All
deal.
right, it's all yours.
All right, thank you. Well, good afternoon, everybody. This is Valerie. I had opportunity today to substitute for Michael. So when I taught and knew I had a substitute coming, and I always had something planned in advance. And the good thing about knowing your substitute is being able to know that somebody's going to come in and they're going to execute your lesson plan as you would have done yourself. So that's a luxury I had in teaching, is having subs to do just that. And I appreciate the fact that Michael, who does not take vacations, has come to the point where, you know, he trusts that I will step in and do his trading plan the way that he generally does. We each have individual ways of doing things, but I try really hard to be like Michael, as you would say. I'm going to go ahead and start with the ES, because I had difficulty with the ES today. I was not in sync with it, and there were times where it was moving fast, and I wasn't able to get the fills that I wanted, because I was watching 3 markets. And every time I get a chance to substitute for Michael, it's a reminder of what a huge task it is to teach, monitor, and implement trades in 3 different markets. So my hat's off to him. That's why all of us, well, folks that I talk to anyway, in their trading, they want to be like Michael. Open came here at 9:30. You know, the first couple minutes, I have the luxury of not, my results are not going to be recorded. So I have the luxury of being able to come in and talk a little bit about how our traders make suggestions about how they might start their trading day. And so we looked at the longer term time frames. We looked at the news that had been out at 8 or 8:30, and what was coming up at 10 o'clock. These are things that we suggest that be part of your trading routine when you sit down to the computer to trade each day. And if you want to be ready to trade at 9:30, then you need to be coming to work at 9 o'clock and, you know, making note of all those things. If you look at the longer term time frame of the 30-minute chart to determine, you know, what direction you're going to be taking your trades in, or anything of that nature, or 5 minutes perhaps, you know, everything that you need to know. So I took the first couple minutes to do that. And when you look, actually, let's just go ahead and take a look at that. This was a bright blue candle, the 9 o'clock, 9:30 candle right here, that we started the day, and it was just moving very quickly as we got started. So the first thing I did was take a short trade and got a break even. As time went on, there just really wasn't a trend. We have price coming down, and again, this is all within that larger candle that was at the time moving to the upside, and there was no follow through for this short trade. You put in, you know, a higher high, came back down, put in a little bit of a lower low. I was looking for, once this, we had the bearish cross, I was looking for the pullback, and I started drawing trend lines. And I do draw a lot of trend lines anymore. Michael has really gotten in the habit of not drawing as many trend lines for us ahead of time, because the markets have been quite volatile and moving fast, and he eyeballs the trend lines. He tells us what's going on, and then a lot of times I'll come back and draw them afterward. I'm still not proficient at doing that. My inclination, because I'm not generally looking at 3 charts at one time, is to draw trend lines in real time, and it honestly, it hindered me a little bit today. It took 16 minutes and 3 trades to get my goal. It was $112.50 at that time, and I took a total of 19 trades if I recorded them all properly. So I guess we'll kind of find out now as we go through. So this was a trade I went back and marked as a valid trade. It would have been a stop out. I was again looking at another chart and came back and did this, or was in another trade while this was going on. But I did mark it. We had this consolidation going on, and one of the things that I often do, back here, I probably talked about, a little bit of a head and shoulders pattern, looking for a breakdown of this area for a continuation of the downtrend. And that's what I did here, was draw the trend lines, because, obviously that's what the support and resistance were telling us, but I like to draw lines. And, so they're not parallel lines or anything in that nature, but generally when you have a price action that's moves like this, it's going to break out in this pennant to the upside. With the lows moving to the upside, generally breaks up to the upside, and ultimately it did, but not without going continuing the consolidation here. While we went along, we marked some of the areas. This is what we were looking at as targets to the high and low, where we expected price to move during that time. And we did come back and put in a higher high, and did not continue any kind of real trend. Had a bearish cross, pull back, and just really sad that I missed this. It was a beautiful bounce off the BBC for a short trade. Would have been a couple of ticks profit. Worst case scenario is that was a break even, or +1 to cover your commissions. When we had the lower low put in, I started drawing the trend line again, and for whatever reason did not mark anything here. Didn't take this trade or even mark it. Price continued down. I did take this trade, not as a higher probability as the red down close off the red BBC. It was a blue close, and it wasn't after looking at it now, after a historical perspective, the cycle was going up pretty steep, but it was not that steep at the time that I took the trade. And it ended up being a break even, then turned around and continued down. More consolidation. You can see here when the news came out, like from 9:58 to a couple minutes after 10, and there was a lot of quick price action while the market was digesting the information there. And here was so it must have been going fast. I started drawing rather than drawing the trend lines. I said, here is where we would have had an entry. It would have been a profitable trade. You could have taken this trade because the entry was above the MA1. Some traders, get concerned over the support and resistance dots, the support dots in this case. And unless you're taking a momentum trade, these dots do not come into play at all. So entry was above the MA1, so I could take these regardless of the dots of this support dots being here, and that was a profitable trade. We pulled back up, did not do anything or even mark any of the continuation trades there. Would have had an opportunity to enter short here. Go ahead and draw that trend line in. It would have been an entry and potential profit here as the green line was getting down into the cycle. So for this area, we would have been following our stop closely behind price, because what we expect is when the green line gets down into the cycle, we expect a pullback, and so we want to be able to lock in as much profit as possible. Another opportunity not taken but identified here, and we have the down close off of the BBC bearish configuration here in the slingshot. Did take the follow-up trade, and it ended up being a break even. Bounce off the BBC to the upside. That was a nice trade, nice profitable trade. This is the area. Once that trade fired off, obviously we were somewhere, my attention was some other place, and I came back and marked, 24.50 as the upside. It didn't get to that point. We got to 39.23, but that's what we, kind of what we were looking at that point in time. And then later, after we had the bullish cross, this was the area to the upside, and price got to both of those. Marked this, didn't take it. Again, drawing trend lines, bearish cross, price pulls back. And I had, don't know why I didn't take any profit here. Was looking at other charts, 1020. So there were other things going on. I was answering questions. Didn't lock any profit here. Got a break even. More trend lines. Talked here about the once price hits the BBC, you don't change the trend lines, and you can see that once price was moving, we've got a lot of these red candles, and then the cycle starts to go down too steep to consider anything to the long side. And price did consolidate, started going down. This was a very nice opportunity for profit. We didn't get it. This one, in real time, the cycle was actually going up more steeply and did not take that. Once it did work in our traders' favor, if someone did take that, these were the targets to the downside, and they did work out. And so at 10:30, I did take a long trade here, and should have moved my stop to break even. So this was an error in my part. Once the price closed above the MA1 or went 4 ticks into profit, should have moved my stop to break even. Due to whatever else was going on, again, focus is often training. So this was a stop out that was operator error. It should have been a break even at worst, at least a tick to cover commissions. And another break even trade. Price moved down, a lot of nice movement, but there was no opportunity for us to take any trades there. After a big move down, expectation is that price is going to recover and move some of that. Looking at the time here, I think Dwayne was in the live training room. I didn't even mark anything here. And I can see why, because any trades in these waves up would have been momentum trades going into unbroken dynamic resistance, so they would not have been valid. Had another lower low, looked to be the start of a downtrend. It looks like a bad choice in in retrospect, where's, Valerie, where's the trend in this? What I was thinking is we had a red BBC, we had a down close off the BBC, cycle was red. Oftentimes, more times than not, the first trade after the bearish cross is going to be successful. So it was a trade that I took, but really, if we put more emphasis on step one, which is the trend, there really wasn't a good trend, because we should have been looking for, went to a higher high to a lower low. So we should have been looking for a lower low before considering a short trade there. This trade, again, ended up being a break even. Should have locked in a tick. I guess it probably was a tick. There was more opportunity there, and there must have been I don't see anything marked, a nice target to the upside that didn't come to fruition and took me out with a couple of ticks there. I think it was 2 ticks. The ES was feeling pretty heavy here. It was heavier to the downside, marked some of those prices we thought would target. Here we have a down close. If I would have drawn a trend line, this would have been a down close. Nice profitable trade. Didn't really continue. Turned around. Had a bullish cross. Another opportunity here, not the highest probability, but would have been a profitable trade. Here it was ending up the live training room, and Bert was talking about something that he had put in an options channel. I marked this in the targets, and you can see price got down there. So a lot of consolidation during the break there on the ES. So that was pretty harsh. There was not, I just didn't have, not in sync, obviously, with the price movement and the ES this morning. There was more trending action here on the crude. Went back and marked this because we didn't get this, but this was a nice opportunity. First crude trade was a break even. This was the first trade I took in the morning. So, the talk about trading plans and how to start your morning routine, looks like it ran about 10 minutes, because this was the first trade that I took, and its time is here at 9:40. And so did not take this trade. Marked it. It was an opportunity to, it was either a stop out or an opportunity to get the 4 ticks, but it really looks like it was probably a stop out. This was a good opportunity that I marked, did not get. This was a nice trade for 10 ticks. It was a bounce off the BBC. Candle was white, but it was an up close. Nice bullish separation here in the slingshot. Took 10 ticks out of that one. Went long here to take a follow-up trade, and it was a break even. Price went sideways, and then there were marked these two opportunities here that obviously I didn't take, and both nice profitable opportunities. great separation here in the slingshot for both of them. This one, again, in retrospect, this looks like maybe it was starting to angle down too steeply, but it really was much flatter. In real time, these are the areas we were looking at for potential moves to the upside. Didn't get any trades in there. I drew this line. Again, we were consolidating and talking about looking for, you look across here, could actually, kind of extend that all the way. Really looking for a break in this level on crude before we considered any long trades. This was also another trade that I was able to take. It was a BBC bounce. It's our highest probability trade. So a red BBC down close and a nice angle and good separation in the slingshot. And that was took 10 ticks there as well. This was a 5 tick. This was not the high probability trade. Candles were blue, but it met all of the criteria. We had good separation in the slingshot, and it ended up being a 5. I took 5 tick profit there, but you can see that there was quite a bit more to be had. You can see the green line was working its way here down into the cycle. And so I follow my stop closely behind price and was taken out with that 5 ticks of profit. Because what we expect is when the green line gets down into the cycle, we expect price to pull back and pull the green line up with it as it approaches back to the, pulls its way back to the BBC. And it didn't happen. It actually went through the cycle and, and continued on. And that's okay. You can't think that you're going to be able to take every trade and pull every tick of profit out of each trade time after time. It just doesn't work that way. That's the truth about trading. And another break even here. We were in a nicer trend there. Did not. This entry would have been above the BBC, but I didn't get this one. And more trend lines. This was a bounce off the BBC. We had the cross, price pulled away, price pulled back, and this would have been a very nice opportunity. We had nice angle here on the cycle, good separation with the green line. This is another 25 tick opportunity. If you'd have taken the, this would have been given you an opportunity here for a momentum trade to follow it up if you had gotten in and out of that already. And then there at the top, if you would have considered that, that would have been a stop out. Okay, let's see, 29, 25. Okay, so if you had taken this trade, you would have had an opportunity to profit. You would not have, you would have stopped out 27, 25, and 7, 32. Every day it's 32. All right, so if you had taken this momentum trade and during this time frame here, not having an opportunity to move your stop to break even with these couple of tick opportunities here, then that would have been a stop. More consolidation. We move, we put in a higher high, then we turn around, put in a lower low. We put in a lower high, and then we put in an equal low. Nothing, no low there to continue any type of trend. This would have been an opportunity to go short. I didn't get filled on this. And that was really very, very nice. Another quick movement, you can see all of these candles, within a minute. So there wasn't a lot of vacillation or oscillation back and forth. That was a nice just move to the downside, quick move for profit that often happens on crude and gold. My next trade here was a break even. Looking at some other things, this would have been an opportunity to go long here and get the goal for the day again. Momentum trade for some ticks. Okay, so there are a couple more opportunities. Now I'm looking at this and I'm seeing little head and shoulders pattern, little shoulder, head, shoulder. It broke down, took an opportunity, missed an opportunity short here. Would have been a break-even trade. Would have been a possibility for a long trade here. There was really a lot of balance in the market at this point. Looking at this, 111 to the upside, and 110 to 83, 85 here to the downside. So there wasn't a lot of not a lot of draw one way or the other. And the balance, everything was pretty well balanced on the bid and ask side. Took this trade long off of the, actually this is a little bit higher here. And that was a 3-tick trade. That was the last trade there. And not a lot going on here during the break. Bullish cross. And there would have been a long opportunity here at 71 and a chance to again make your goal for the day. So that was crude. That ended up being a net 35 ticks. Oh, while Dwayne was talking, I've marked this ended up being a break-even trade. But you can see, I mean, one of the things I'm forever drawing trend lines. And then here we are on gold. Ultimately on gold, I had I think three trades, and in the pre-market, gold was moving up, and then after the market opened and I was talking to the traders, giving my little philosophy on morning routines, this was the third trade I took, and this was a trade where I got the goal. I had taken the crude break even, gotten 1 tick on the ES, and then this 10-tick trade on gold for the goal. I don't know what I was talking about here, but I think this was marking this bounce, this up close off the BBC as not a trade because we didn't have all of the steps. We had the cross, we had a bullish cross, but price never pulled away after the cross. So we did not meet all of the requirements for a trade setup. So it took a few minutes there to do some, real life education. Price moved, again, we had a little bit of a head and shoulders thing here. It's not as big a deal as far as the indication on price movement on this 4-tick range, but you can't help but see those kinds of trading patterns. And you can see we never broke that. I mean, we came down. This was really great support. And then when price moved to the upside, this was an opportunity. This is where, at that time, we thought that price was going to get to. Did take this long and got a couple ticks On this, that would have been, what was that? That was a break even or a couple ticks on that. Price continued up, then boom, started moving in opposite direction. There was nothing, no trades until we were able to break that dynamic support. Then we kind of bottomed out. Price started moving back to the upside, picked up 5 ticks here. We did not have a follow through trade, and then price action went back to the short side. We had a bearish cross. Price pulled away. Price pulled back to the BBC with a down close. Nice angle here on the cycle. Good separation with the green line and the slingshot. Just beautiful trade. Another 10. There was 8 or 10 ticks on that one. It's a little more consolidation. Okay, so I guess that was the 8. That was the 8 tick trade, and then during the break, price went pretty much sideways, and then at the beginning of the radio show, really looking for this nice round number here at 1825 for price to get up to, and after it put in this high, and it never did. It's looking on the bearish side, and so we have a bearish cross. Price is pulling away. We don't have a setup in the slingshot yet, but if price continues down a little bit and pulls back to the BBC, it'll bring the green line with it, and we should have a probability of getting a short trade at that time if that actually plays out in that respect. So that is it. That's the sub version, and I have the luxury of being able to substitute for Michael tomorrow morning as well. I asked traders to send me some ideas. I think what I would like to do, if they would like, is I'm thinking of a trade off the 7-tick range chart with the ribbon BBC tomorrow during the live training room. I'll do it at least for the ES because I want to, but if that's something that I don't know, our traders are still, we're all still getting used to this. I don't know if they're looking to incorporate that into their trading yet. So, may keep the crude and the gold with the normal 4-tick range chart and just do the ES with the ribbon. So just looking for some feedback from them. I took some opportunities today to answer questions about putting weekly trading zones on, how to set tabs, manipulate other things. With the new DT Pro 4.0, the support and resistance comes on as lines. They don't come on as dots. So illustrated how to do that. So tomorrow morning, if you all have any specific questions for me related to using the platform and manipulating the properties and things of that nature, please bring them. This is a good forum where so many traders then can hear the questions and go ahead and understand the solutions as well. Let's see. Oh, okay.
Frederick and I agree that the ES 7-tick ribbon would be most excellent.
Okay, cool. I'm anxious to do it. So I will do that. And Michael, my numbers took 19 trades and was minus 12 on the ES, plus 21 on gold, and plus 35 on crude. It took me 16 minutes and 3 trades to get to the goal for the day of and at that point I was at $112.50. So that's what the substitute did. And that's all I've got. That's probably more than everybody wanted.
The student becomes the teacher.
That's right. One day it might be you guys.
Valerie started out with us. She just wanted to learn how to trade. And now you just saw. In fact, the job that you did this morning, both in the live training room and with the recap today, I think can be summed up in one word.
Excellent. Absolutely excellent.
Okay, that's 3 words, but yeah.
Well, you're always complimentary, and I appreciate it. And it's important for our traders to see that you don't have to be Michael to get your goal consistently.
And that's one of the great things when you have the opportunity to see Valerie in the live training room. For some of you, Michael does move at a bit of a brisk pace. Valerie has a much lower key approach, not as quick, but maybe a little more detailed. And she explains every move she makes, every trade she takes, and answers your questions all at the same time. And it was nice to have a bird in with us this morning as well.
Yeah, that was nice. And I make a point to say that I have the luxury to do that. Michael, his objective is different day in and day out. So I have the luxury to do this, and I appreciate it. And I know our traders like it as well.
They do. They love it. I get nothing but positive feedback.
Don't tell Michael. All right. Thank you, sir.
Okay, did you already show them how to take the free trial? I can just tell them. It's very simple. Go to eminitrainingschool.com for a 1-week free trial. No credit card required. And once you fill out that little form and hit submit, you'll get an email. Make sure you click the link in the email you get. That way we actually know you took the free trial. And Valerie will send you out all the necessary information so that you can join tomorrow morning at 9:30 a.m. Eastern when the live training room opens. Again, the live training room is reserved for members only and those who are taking advantage of their 1-week free trial. And if you start midweek, we'll extend you, we'll give you 5 consecutive trading days. So don't worry about waiting till next Monday to sign up. You can sign up today, get started tomorrow, and wrap up next Monday. So,
Absolutely.
Are you ready for me to grab the screens?
I am.
Okie doke. And there we go.
All right. You're in business.
All right.
Thanks again.
Thanks again, Valerie. Great job. Really appreciate it. All right, folks. That's what happened this morning during the first 2 hours of Wall Street. Now, along with providing live training every day for 2 hours, we also have 2 different alert services. We have the Logic 247 alerts, and this is where we stand on the week with Logic 247. Why is it called Logic? Because it's not based on a secret or a mystery. It's based on logic. And the more logical it becomes, it just eventually becomes common sense. Because over time you learn how price flows. And price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Our indicators serve as dynamic support and resistance. The weekly trading zones serve as fixed support and resistance. The weekly trading zones we've published since December 14th of 2009. And they go out Monday morning, 6:15 a.m. Eastern. That gives all of our traders plenty of time to get them on the charts before Wall Street opens for the week. So this week, which is week 204, and over those 204 weeks, we've issued over 11,000 individual alerts, each of them a trend trade as defined by the 30-minute chart and the BBC. And when we go to the charts here in a few minutes, I'll explain to you and show you exactly how that looks. So there's nothing wrong with counter trend trades once you become an experienced trader. However, for those who are learning how to trade, we want to provide you with the highest probability, lowest risk trade opportunities, and that's when you have the wind at your back. Okay, so that's why those 11,000 plus alerts in the alert channel are all trend trades as defined by the 30-minute chart, price, and the BBC. So this week, since the market's open Sunday night at 6 p.m. Eastern, and once the alert channel opens on Sunday night, it remains open around the clock until Friday afternoon at 5 p.m. Eastern. So today being Tuesday, as of 12 noon Eastern, we have issued a total of 39 alerts. 6 never triggered, still waiting on the outcome of 4. We've had 29 actionable alerts, of which 4 or 14% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders. Now, the logical alerts are based on current price action. Our original alert service, the concierge trade alerts, the format for those is a little bit different. And I'll show those to you. In fact, be prepared to take a screenshot if you would like. Okay. The concierge trade alerts. The report was posted last night at 6:45 p.m. Eastern. The alerts, now, they're based on historic price action, and when historic price action meets current price action, that's where you will find some of your very best high probability, low risk trade opportunities. So I do my best based on my schedule and based on the market activity to get this report published as soon as I can after the Globex open. Now, we cover the S&P, the Dow, the Russell, crude, NQ, gold, silver, the euro, and we've added the 30-year bonds. So if you want to grab a screenshot, go ahead and do that. Chances are you don't trade all of those markets. But here's what you should do. For the markets you do trade, once this report is published in the CTA channel in Telegram, make note of where price is at that moment in time for the markets you do trade. We'll use the S&P as an example. From this moment in time going forward, if price starts trending up towards 39.21, that's bullish, and so our strategy will look for opportunities to be long the market. On the other hand, if price starts trending down towards 38.91, that's bearish, and so our strategy will start looking for opportunities to be short the market. And there'll be days where we have two-sided action, which means we trigger on the long side and on the short side. Okay? Now what you should do is put a line in the sand at 39.21, line in the sand at 38.91. This way, when we go to the charts here in a few minutes, you'll see how clear it makes everything. Okay? Again, these do not come out around the clock like the logic alerts. These are posted once per session, and the numbers are good for the entire session. Also, whether it's a logic alert or a CTA, once an alert triggers, there is a greater probability of it triggering multiple times and not triggering multiple times. So, I had the chance to get that screenshot. So we'll bring this down. Now, before we go to the larger time frame charts, got a couple of headlines I want to share with you. Now, undoubtedly everyone is familiar with the January 6th committee and the political theater that we've seen on TV. But depending upon what news channel you listen to, you may or may not have heard what happened Friday night at the Arizona state capitol. Now, this was not published. What I'm going to share with you here was not published by any news media outlet. This was published by the Arizona Department of Public Safety. Protest over the United States Supreme Court's ruling overturning Roe v. Wade brought an estimated 7,000 to 8,000 people to the Arizona State Capitol complex in Phoenix on Friday, June 24th. I wonder if there'll ever be a June 24th committee. Probably not. What began as a peaceful protest evolved into anarchy and criminal actions by masses of splinter groups. As groups realized the state legislature was in session, they attempted to breach the doors of the Arizona Senate and force their way into the building. The violence of their efforts literally shook the building and terrified citizens and lawmakers who were at that time occupying the building. As the glass doors bowed from attempts of forced entry, the occupants of the building were instructed to move to secure locations. Due to the direct threat to the occupants of the Arizona Senate building and damage to the building itself, Arizona state troopers took immediate action. Immediate action. And they were forced to utilize tactics including the deployment of field force teams and tear gas. As the riotous behavior at the legislature was taking place, concurrent and spillover criminal misconduct in the form of felony criminal damage and the defacing of state memorials was occurring in Wesley Bolin Plaza, which is also in downtown Phoenix. Troopers exercised patience and application of tactics in Wesley Bolin Plaza as some people unwisely brought children to the protest, which, as we said, started out peacefully but quickly turned unlawful. I even saw a photograph of a woman with her two children. Maybe they were 5, 6, 7 years old. She had a sign hanging around her neck. She had an arrow pointing at one child. She had an arrow pointing at the other child. And the sign said, "Don't do this to yourself." Can you even imagine? And these children, when they, now, once something's on the internet, it lives forever. These children are going to grow up and they're going to know what their mother thought and felt about them as they were children. And I'm sure she'll say she just got caught up in things, but come on, let's be adults here. Troopers exercised patience and application of their tactics. Significant criminal damage impacted the following memorials and properties: the Wesley Bolin Memorial Amphitheater, the 158th Regimental Memorial, the Arizona Peace Officers Memorial, the Korean War Memorial, as though Korea or the Korean War had anything to do with what happened here in America in the Supreme Court last week. The Arizona Law Enforcement Canine Memorial was damaged. Operation Enduring Freedom Memorial damaged. And the Lieutenant Frank Luke Jr. Memorial also damaged. Now, I'm going to show you a few pictures. And if you have children in the room, you might ask them to step out, because there might be some language here that maybe kids shouldn't see. Here, let me open this up full screen. Now, basically all you're seeing here is just graffiti, but it's going to take a lot of taxpayer dollars to clean up this garbage, which honors this brave soldier, airman. Now, one thing that's right is freedom is not free. Okay? Lives are given, blood is shed for the freedoms that we enjoy here in America. Aboard the court, that was a common theme. There you see it again. And Arizona taxpayers are going to pay to clean up this mess. State of Arizona erects this monument as its tribute to his valor, extraordinary bravery, and distinguished service in the World War, and in gratitude to all her sons who served. 1930. It's really hard to believe. As you can see, this came directly from the Arizona Department of Public Safety. Okay. No mass media, no news, no cable news channels involved. In other headlines, Ukrainian President Zelensky said yesterday that more than 1,000 civilians were inside a shopping mall in central Ukraine that was struck by a Russian missile in what he described as one of the most defiant terrorist attacks in European history. An air raid warning sent many shoppers fleeing just before the missile hit. Local authorities said at least 18 people were killed. More than 50 were injured. Our thoughts and prayers are with those injured and with the families of those killed. And dozens of people still remain missing. We don't know how many more people might be under the rubble. Ukraine's Air Force said the missiles were fired by long-range bombers that took off from a Russian airbase north of Ukraine. And as I've said, the Supreme Court's been quite busy lately. The Supreme Court ruled yesterday that a Washington State school district violated the religious freedom of a former high school football coach, Joseph Kennedy, who lost his job after holding post-game prayers on the 50-yard line. Kennedy led the prayers for years and refused to stop after the Bremerton School District asked him to, because administrators feared the district could be sued for violating students' religious rights. But what about the religious rights of those who chose to pray? Nobody made anybody pray. They weren't forced to pray. The 6-3 conservative majority said the First Amendment clause against the establishment of religion doesn't require the government to single out religious speech for special disfavor. The court's 3 liberal justices said in a dissent that the ruling weakened the nation's long-standing commitment to the separation of church and state. Well, on the 50-yard line, it's in a state, but there's no church. And would they take away our right to prayer? That's a very scary thing. Of course, no one can ever really take away your ability to pray because you don't have to move your lips to be deep in prayer. WNBA star Brittany Griner briefly appeared Monday in a Russian court where a judge ordered her detained through her trial on drug charges. Griner's lawyer said the next hearing was set for July 1st and would mark the official start of Griner's trial. Monday's proceedings were closed to the public, but journalists snapped photos of Griner, 31 years old, as guards walked her handcuffed through the building. Now, you'd think some big crime had been committed here, but the Phoenix Mercury Center was arrested February 17th for allegedly trying to take cannabis vaping cartridges through a Moscow airport and charged with smuggling drugs into Russia, where she played basketball in the off-season. She could face up to 10 years in prison if convicted. And is this going to be used as leverage against the U.S. to try to get some of these sanctions lifted? You better believe it is. Now, some might say Griner might have had some second thoughts about taking the cartridges there, and whether she did or not, I guess, is not known. But she was attempting to bring them back to the U.S., where in many states, and probably pretty soon all states, vaping cartridges will be available to those with a medical permit, and here in Arizona, as many other states, if you're 21, you got picture ID. You got to have picture ID to buy a vaping cartridge. You got to have a picture ID to buy alcohol or tobacco. But voting? No. Now, we do have some pretty good voting laws here in the state of Arizona, but you never know when that's going to change. The House Select Committee investigating the January 6th Capitol attack, more political theater, said Monday that it has scheduled a previously unannounced Tuesday hearing, that's today, to present recently obtained evidence and receive witness testimony. The surprise witness, CNN reports, is Cassidy Hutchinson, an aide to former White House Chief of Staff Mark Meadows. The news came after the panel talked with British filmmaker Alex Holder late last week. Holder gave the panel more than 10 hours of footage he shot after being granted exclusive access to former President Donald Trump and his family for a documentary project. My, how we love to bite the hand that feeds us. The footage included interviews with Trump, his adult children, and former Vice President Mike Pence. Holder received a subpoena last week and said he was actually surprised the committee did not contact him sooner. Judges in Louisiana and Utah on Monday temporarily blocked state trigger laws intended to ban abortion as soon as the Supreme Court overturned Roe v. Wade, which it did Friday. Louisiana has passed several trigger laws since 2006, so it wasn't immediately clear which policies would take effect. The Louisiana order followed a lawsuit by abortion providers calling the laws constitutionally vague. Judge Robin LaRusso didn't comment on the merits of the case, but set a hearing date for July 8th. The Utah judge granted a 14-day restraining order requested by Planned Parenthood, citing the possibility of irreparable harm. That's a little vague. 11 other states have similar trigger laws. And this next headline is just horrific. Authorities found at least 46 people dead in a tractor trailer in San Antonio, Texas, yesterday. 16 survivors were hospitalized. A person who had been working nearby called police after hearing someone cry for help and seeing several bodies through the trailer's partially open doors. San Antonio Fire Department crews arrived and found stacks of bodies inside, along with some survivors too weak to get out. The SAFD San Antonio Fire Department Chief Charles Hood said the victims died from heat stroke. Temperatures in the area reached more than 100 degrees Fahrenheit, and the trailer had no air conditioning and no water. Mexican authorities tweeted that at least 2 of the victims in the alleged human smuggling operation were from Guatemala. Federal agents seized the phone of John Eastman, a lawyer involved in former President Donald Trump's attempt to overturn the 2020 election loss. Eastman revealed yesterday in a New Mexico court filing. The filing included a copy of a search warrant the agents used to obtain the phone. The filing said FBI agents stopped Eastman and seized his iPhone as he was leaving a restaurant last Wednesday. Eastman, a California former law professor who helped develop a plan to block the certification of the 2020 election results, called the seizure improper and asked the judge to order his phone returned. The incident is the latest sign that the Justice Department investigation into Trump's efforts to reverse President Biden's election victory is intensifying. California's Democratic-controlled legislature on Monday approved a measure that will let voters decide in November whether to protect the right to an abortion in the state constitution. This is how it was supposed to work. Each state and their voters get to decide. Abortion hasn't been made illegal, it's simply been put back in the hands of the people. Governor Gavin Newsom also issued an executive order saying California won't share medical records with anti-abortion states or extradite doctors who care for patients who come to the state to seek the procedure. House Speaker Nancy Pelosi said Democrats in Washington are looking into ways to protect personal data stored on reproductive health apps and to ensure the right to free travel between states after the Supreme Court's ruling overturning Roe v. Wade, the decision that protected abortion rights in the United States for 50 years. And in more bad news, an Amtrak train derailed Monday in Minden, Missouri, about 100 miles northeast of Kansas City, killing at least 3 people and injuring 50. 2 of those killed were on the Los Angeles to Chicago train, which had 243 passengers on board. The others were in a dump truck the train hit at a crossing. causing 8 cars and 2 locomotives to leave the track. One of the passengers, Alan Galloway, said, "When I saw what was happening, I just yelled out, 'No, no, no.' Then it was over." It was the second time in 2 days an Amtrak train has hit a vehicle. On Sunday night, a train carrying 85 passengers hit a vehicle in California, killing 3 people who were in the vehicle and severely injuring 2. And our final headline for the day. A federal grand jury in New York has issued subpoenas to the shell company merging with former President Donald Trump's social media company, which operates his Truth Social app. Now, the company revealed this in a regulatory filing flagged Monday by the New York Times. Digital World Acquisition, a special purpose acquisition company, or a SPAC as it's called sometimes, said in the filing that the company and its directors received the subpoenas in the past week. SPACs are not supposed to have an acquisition target in mind when they raise money from investors, according to the Times. A Securities and Exchange Commission investigation into the same merger is focused on whether Digital World and Trump media leaders held serious but undisclosed talks before the SPAC went public. And that's the news for today so far, June 28th, 2022. All right, let's get to the charts. S&P Daily. We talked about this yesterday. We talked about the potentiality, probability. The most recent high was put in back on March 29th. The most recent low was put in on June 17th. Price managed to get back above the 24% reverse fib, and then was followed with a doji. That was the first, a red doji, I might add, which was sort of the first warning sign. So we talked about it yesterday here on the show. Remember, we archive every show, so you can at any time go to youtube.com/CFRN, scroll back a week, 6 weeks, 6 months, couple years, not to hear the headlines of the day, but to see the recap of what happened in the live training room and the recap of what happened with the Logic 247 alerts and also the concierge trade alerts. Try a little coffee there. So, we said yesterday our concern was that when we opened last night, price could dip below the daily BBC and the 24% fib, which is a big deal. So we've got a little bit of a double top here on the daily chart. Okay, we talked about if price could overcome that high, then we would expect resistance here at the 38% reverse fib and the previous bearish cross. But we also talked about the potential of what would happen when we opened last night, or even yesterday. If the candle went red, this gain could be nothing more than a head fake. Currently, price is sitting right on top of the step line. And because the step line is directly below price, that could be potential support. Markets, as you'll see as we go through each individual market, look pretty heavy. If we trade below the daily step line, the next area that we would expect potential support would be this area right here, where we've got a swing low and where we have blue and climbing, which represents support. Now the BBC stands for bull bear cross. When price crosses above it, that's bullish. We anticipate higher prices. But then when price crosses below the green line, we're bearish and we anticipate lower prices. We did get back above the BBC here, but as you can see from this little trend line, we had a series of lower highs, which is bearish, and it eventually took us back below the BBC, which took us down to that most recent swing low at 36.39 on June 17th. So then we had to move up for 1, 2, 3, 4, 5 sessions, and then we stalled just above the daily BBC. Last night we opened and moved higher, but once we hit the high of the previous day, the market reversed back to where it opened. So what was a green candle initially became a wick, and as price continued lower, became a red candle. We're now below the daily BBC, the 24% reverse fib. If we find ourselves closing today below the step line, then most probably we will head down to this area. Now, I'm not saying we can't get there today, because there's still quite a few hours left in the trading day. But you see that little bit of wick right there. So see, the step line has provided some support at this point. But I wouldn't get too excited about that. Our focus will typically here for the rest of the session be on the short side. Okay. Now we start out with the daily chart every day, because I want to train you to, whatever market you trade, look at the daily chart before you begin your trading session. Why? Because the institutional traders, the deep pockets, the Goldman Sachs of the world, they look at daily charts and weekly charts and monthly charts the way you and I look at 30-minute charts and 5-minute charts and tick charts and range charts. The reason the institutions look at the larger time frames is because they have a lot of money to put to work, and their shareholders are counting on them to put that money to work. And so institutions are looking at much larger targets than we typically look at, and they're also willing to exercise more risk on an individual trade. After all, it's OPM, other people's money. Let's go to the 30-minute chart of the S&P. Here's that two-sided action that I mentioned earlier. The vertical line separates today, Tuesday, from yesterday, Monday, actually Sunday night and Monday, and then back over here is Friday. Now, again, the weekly trading zones. Yesterday, I had last week's zones up on the screen because the alerts sent out Sunday night were based on last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. But now these are this week's weekly trading zones. Now, when you look at one of the zones like 39.58, the zone is actually 39.58/59. This zone is 38.71/72. Okay, so the market opens last night. This was the opening candle. We pull up to the BBC. The pullback holds more often than it doesn't, and this pullback held. Price got below, blue and climbing. The short CTA trigger was 38.91, and we dropped to 38.8575, so we'll call it 38.86 to be conservative. That's 5 points at $50 a point. That's $250 per contract traded. If you've earned the right to trade 10 contracts, then it's $2,500. Okay, simple math. Price then gets back above the BBC, so now we're anticipating higher prices. The trigger's at 39.21. On our first move up, we go to 39.27. 6 points, $50 a point, $300 per contract traded. Price then gets back below the trigger, triggers again, and this time we make a run to 39.37. That's 16 points at $50 a point. Remember I said once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. We get back below the trigger again. We've already had one trigger, two trigger. We pull back to the BBC. The pullback holds. It holds more often than it doesn't. And then we trigger 39.21 up to 39.31. 10 points, $50 a point, $500 per contract traded. Then we get back below the trigger, the pull back to the BBC holds. However, not all triggers are created equal. You'll notice on all of these triggers that we've discussed, 1, 2, 3. I don't know if I mentioned this fourth one here. We ran up to 39.29, so that's 8 points. About the same as that one. Okay. But we had blue and climbing on all those triggers. This trigger had red and falling overhead, which represents potential resistance. Now, our more experienced traders might have waited for price to get above red and falling, to get above this swing high, and then go long. And even more conservative would be to wait for price to get above this swing high. And that would still give you an opportunity for 39.43 up to 39.50. This was yesterday's high, 39.48. Today's high, 39.50. So we beat yesterday's high by 2 points. And remember, as I told you, on the S&P, the market climbed off the open, but is now reversed. Blue and climbing has turned to red and falling. Price has gotten below the BBC. The short trigger, 38.91, took us all the way to the target. Now, the zone is 38.71/72. So from 91 to 71, that would be 20 points, but it's 19. Just shy of $1,000 per contract traded. 20 points at $50 a point, $1,000 per contract traded. Now, only 3 things happen at a weekly trading zone. The most common thing is what you see here, consolidation. Okay. Second most likely is rejection. And I'll show you an example of rejection when we get to a chart that has rejection. The third and least likely thing, but it's happening more and more of late because of the increased volatility, we slice through this zone like it's not even there. When the slice runs out of steam, it will typically retrace back to the zone it sliced through, just like it did right here, and then continue in the direction of the slice. And so where's the next window of opportunity? See these lows here? Got to take out that low before you get short, because that low could become support. You got to see that support broken before you take a trade on the short side. So we have one. Now this is just with one CTA alert. Now this doesn't include. We already recap the logic alerts. Okay. We have 1, 2, 3, 4 valid triggers on the long side. And then we had a 5th trigger that you need a little bit of education to be able to handle that one. Oh, and then of course we had here, that would be 6. And then number 7 took us right to the target. On every alert, whether it's a logic alert or a CTA, the final trade to target on a long is the zone overhead. On a short, it's the zone below. The logic alerts typically have multiple targets. You'll see an entry, it'll say buy or sell, and then there'll be a T for trigger. If it's a long trade, then you'll see potential resistance, which is trigger number 2, and then potential resistance, trigger number 3, number 4, number 5, however many there are. But the final trade to target will always be the weekly zone above on a long. And on a short logic alert, you'll have an S for sell, T for initial trigger, and then instead of potential resistance, you'll see potential support, which would represent trigger number 2, trigger number 3, down to the final trade to target. So we have exceeded the target. Okay? And again, as you become more familiar with our methodology, our strategy, how to read the indicators, you certainly could be taking advantage of this move. Okay? Very important to remember. So that covers the S&P from the 30-minute perspective. On the Dow, more two-sided action. Here's where the market opened, pulled up to the VBC, the pullback held, and down we come from 31,410 to 31,310. Exactly 100 points at $5 a point, $500 per contract traded. Then we had a little trigger here, okay, which took us down to the step line, which became support. So from 410, we dropped to 31,385. So a little over 20 points, $100 per contract trade there. And then we get back above the long trigger. We've already discussed these. And then here we had shorts over here, and then we short here at 31,410. And we drop straight to the trade to target, which is the weekly trading zone. So I will use my calculator just to make sure I get it right. 31,410 minus 31180. It's 230 points at $5 a point, $1,150 per contract traded. Now, when we rally up to a zone, we expect resistance, and that's what we got. We spiked it. Zones are an area. So we found the resistance the market was looking for. And then as we dropped and we hit the weekly trading zone, support. When price drops to a zone, you should expect support until proven otherwise. And so this support gave us a nice bounce up to 31,282. And then with the step line overhead and red and falling, bearish cross up here, price continued lower. Okay. This candle sliced through the zone. This held. This one sliced through. And then what did it do? It retraced back to the zone it sliced through. And now it's attempting to continue, or it has continued, in the direction of the slice. Russell, more two-sided action. Here's where the market opened last night. We got above the BVC, we opened above it, and we got below it. We came right down to the trigger. At 1764, and we put in a low at 1763.30. Not quite $100 per contract traded. Basically a rejection there. Now remember, when you're trading the alerts, you don't use the 30-minute standalone. You use a smaller time frame trigger chart. Some of our traders use a 5-minute chart. Some use tick charts. Some use range charts. Just something smaller than a 30-minute chart. This allows you to time your entry, because when price turns, okay, it's going to turn first on a 1-minute chart before it turns on the hourly chart. I'm not encouraging you to just trade a 1-minute chart, because you'll get too many false starts. Okay, we will teach you over time how to use multiple time frames, so you can look at your 30-minute and then whatever time frame you've chosen for your trigger chart. You'll be able to time your entry. And remember, we want to risk as little as possible on each trade based on market structure. So on an alert, you just don't automatically use a $300 stop loss. You use market structure to tell you where the chart actually tells you where the stop loss needs to be. And even if there's $10,000 of potential profit in a trade from the entry to the final target, you still don't want to risk more than $300 per contract per trade, less when possible. Okay. I get that a lot in mentoring sessions. People say, oh, so, okay, on the alerts, I'm supposed to risk $300. No, that's the maximum you'll risk. Also, you never risk more than the potential profit in the trade. And how do you determine the potential profit? You look at the entry and the final trade to target. If it's a long, you'll figure out the distance between the two. That's the potential profit in the trade. And if it's a short, you look at the entry price and then the final trade to target below it. That's the potential profit in the trade. So again, never risk more on a trade than the potential profit in the trade. It's bad math, bad science, and it will lead you to eventually blowing up another account, which is what you don't want to do. All right. Now, we come down through the Russell again here at 1764, down to 1761.5. So it's 2.5 points. 2 points is $100, so a little over $100 per contract traded. Then price got back above the trigger. Once triggered, it's probably going to trigger again. And this time, we drop all the way to, because this candle closes here, opens here, continues down, and so we put in a low at 1752. So that's 12 points at $50 a point, $600 per contract traded. Then we get back above the trigger at 1764. And the zone is 1743/1744. And the swing low is 1744.2. So from 64 to 44, that's 20 points at $50 a point. That's $1,000 per contract traded, from the published entry to the published target. It's actually 2 ticks shy of $1,000 per contract traded. On the NQ, we got rejected on our first move up. Here's where the market opened. Okay, we got a short trigger. Okay, red and falling, and it took us right to the target from 12.031 to 11.989. So that would be 11 and 31 is 42 times 20, $840 per contract traded from the published entry to the published target. And then we don't make it through the long trigger. Blue and climbing turns to red and falling. Down we come again. And this time we trade right to the target again. So it's the same thing all over again. We sliced through that zone, but what do? We retraced back to the zone and then continued to the next zone below. Now, you'll learn over time that you don't have to wait for price to get to these triggers. Number one, you've got logic 247, which is based on current price action. And as you understand the methodology and the strategy, there's no reason not to get your points here before you even get to the trigger. And then you get your goal for the day, and then there's another opportunity to get your goal for the day. This is what rejection looks like. It's when price comes all the way down to a zone. Again, zones are an area, so it missed it by a couple ticks. But when the 30-minute candle closes, the only thing left touching the zone is wick. You can see it again over here. Okay? Price came all the way down to the zone, but when the 30-minute period ended, all that was left touching the zone was the wick. Weekly trading zones are your fixed support and resistance for the entire week. Once they're published Monday morning, we don't change them in any way. They're not massaged or manipulated. They're carved in stone for the entire week. Just like the CTAs are carved in stone for the entire day. Okay? All right. So again, our traders who've been with us a while, once they see this slice and this retracement and this low taken out, and they know that this is just a golden window of opportunity. Okay, 11,920 down to 11,820. That's 100 points at $20 a point. It's $2,000 per contract traded. And yes, you too can learn the methodology and the strategy. It's very simple. You don't see 1,000 different indicators here and oscillators and any of that stuff. I mean, this is about as basic as it gets. All right, crude oil. No trigger on the short side. Our initial trigger, 110.65 was the trigger. We make it up to 110.70. It's $50. We pull back. We make another run. This time we make it up to 84. It's $190 per contract traded. And then we get back below the trigger. And we trigger again. And it takes us up to 111. So that's $350 per contract traded. And we get back below the trigger, trigger again, back below the trigger, On this move up, you've got red and falling to deal with. So if you're new to trading, if you're learning, pass. Because that red and sideways represents potential resistance. And remember, as you're learning, you only want to take the highest probability, lowest risk trade opportunities. Price gets back below the trigger, the pullback to the BBC holds. I might have mentioned it holds more often than it doesn't. And it takes us right up to the target at 111.15. It's $500 per contract traded. Now we continued higher all the way up to 111.66, but the trade to target is the zone above. And so we get back below the trigger, but again, we got red and falling. So, and without much space here, best to stay away. And then we get below the trigger. Red and falling turns to blue and climbing and takes us up to the published target of 111.15, and then some all the way up to 111.22. And no triggers on the short side. Just a lot of consolidation across here. There's a good example of rejection right there. Big mean red candle, but by the time the 30-minute period was over, all that was left touching the zone was the wick. Okay? And that's what we anticipate. Okay, we expect a zone. When price drops to a zone, we expect it to be support. Support, support. Here we slice through. The increased volatility has given us more slices than we've seen it since the inception of the zones, which was December 14th of 2009. So we have well over a decade of data on how price behaves around the weekly trading zones. And when you become a passport holder, which is a lifetime membership, never expires, has no recurring fees, no upsells, no insults to your intelligence, no new shiny objects to buy every other week. With us, lifetime just means lifetime. Unlike that lifetime or that unlimited cell package that you have, which gives you unlimited data, and in the tiny print it says, well, until you use this much, and then we're going to slow you down. I'm amazed they're able to get away with that, but they do. Okay, so that covers everything on crude. Let's go to gold. Gold opens down here, gets above the BBC, pulls back to the BBC, the pullback holds, and the zone holds. When price pulls back to the BBC, we expect it to hold until proven otherwise. When price pulls back to a weekly or drops to a weekly trading zone, we expect it to be support until proven otherwise. And so the trigger was 1830. This first run up was like 3 ticks, so not much there. And then we make another run, and this time we're 1 tick shy of $100 per contract traded. Then price comes back down to the zone, consolidates, drops, and from 1821, this first drop took us down a half a point, $50. Then we pull back to the BBC, and it holds, and it holds again, and it holds again, and it holds again. You get the idea. And then we trigger 1821, and it takes us down to 1819.60. That's $140. No. Yeah. $21. 20 is $100. Yeah, $140 per contract traded. Then we get back above the trigger and we drop again right basically to the same spot. And we get back above the trigger and we drop to 1819.9, so it's $110 per contract traded. And we do it again, $110 per contract traded. And then here we get like a 4-tick drop. Here we get rejected, and here we tripped over the line about 4 ticks. On silver, no trigger on the long side. Market opened here last night. Down we go. Now with silver, 2 pennies pays $100. When the price of silver moves $1, that's worth $5 grand per contract traded. And so from 2107 we dropped to 2104, 3 points, $150 per contract traded. And then we make a run up to the weekly trading zone, which we expect to be resistance to proven otherwise, and it was. And that sent us back below the BBC, and we get blue and climbing, turning to red and falling. And so from 2107 we drop to 2104. It's 3 pennies, $150 per contract traded. And we get back above the trigger and we drop all the way to the target, 2096/2097. It's a 10 penny drop, 10 cents. That's $500 per contract traded. And then this candle sliced through, retraced right. It's funny to see, after all these years, to see so many slices. Sliced through, retraced to the zone it sliced through, continued in the direction of the slice. That's how that works. And of course, we expect support here at the zone. We had this huge spike of the zone yesterday, but ultimately the zone held, sent us higher. And on the euro, okay. Now, let me explain. Some of you aren't familiar with the euro. I personally don't trade it myself, but that doesn't matter because our strategy and our indicators work across all markets, all time frames, not just futures, stocks, crypto, forex, because price flows across all markets and all time frames exactly the same. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been in existence since the inception of the markets, and it will remain in existence until the markets cease to exist. So, when price goes from 6,700 to 6,800, 100 ticks. Some of your platforms might show it as 10 ticks, but on the DT platform, it shows it as 100. From 700 to 800, that's $125 per contract traded. So the trigger here was at 590, and it went up to 680. So that's a little over $100 per contract traded, but not quite. If it had gone to 690, so it went to 680. If it had gone to 690, then it would have been $125 per contract traded. Now before that happened, we had hours and hours and hours of consolidation at the weekly zone. That's the most common thing, whether it's a 2-candle consolidation or a multiple hour consolidation. That's the most common thing. And then here you have a rejection, okay, and then price got right up to the trigger, the important price, important area, failed to trigger. So down we come, blue and climbing, turns to red and falling. The trigger is at 255. So if price drops to 155, that's $125 per contract traded. And then we get rejected at the zone, gives us a bounce. That's not a slice, that's a rejection. But then the next candle takes us through. It does slice, and this time we don't pull all the way back up to the zone. We simply continue down to the next zone where the market finds support and puts in this long-legged doji. Now, not every doji is a turning point, but at many turning points you will find a doji. Okay. If you contact Valerie, if you're on the free trial, we have a free PDF that you can download that has the 10, 12 most common candlestick patterns. And that's nothing new. That's not the latest thing that came down the pipe. Japanese rice traders came up with candlestick pattern trading over 400 years ago. Okay? All a candlestick is a graphic representation of buyer and seller sentiment at any given moment in time, in any market, on any time frame. Okay? So when you hit an area that you expect to be support, and you get a long-legged doji like this, well, then you can anticipate this. Okay? But we didn't quite, there's a lot of selling pressure, so we didn't quite make it all the way back to the zone overhead or the BBC. We dropped back to the weekly trading zone where we found support. Red and falling has turned to blue and climbing. And so the next high probability move from here, since we've gotten above the step line, would most likely be a move up either to this high or to the BBC itself. But that would be a counter trend trade. Now, I said earlier that in the Logic 247 alert channel, there's over 11,000 individual alerts that have been issued over the last 204 weeks. Okay? Every one a trend trade. Now, the trend is determined by price and the BBC. When price is above the BBC on the 30-minute chart, we're only going to look for long trades in regards to the alerts and the discretionary trading. But before I can start teaching you discretionary trading, you need to master the mechanical model taught in the live training room. Because under the hood, they're the same thing. They look different because of the larger time frame and the larger targets and the larger stop loss. But under the hood, it's the same underlying principle, which hasn't changed since the inception of the markets. And it's the underlying principle of our strategy and methodology. Our goal is not to beat the market. The market is our business partner. We don't want to beat it. We just want to do whatever it does. And what our indicators and our weekly zones help us to see and understand with great clarity is what the market is trying to do. So I don't want to be a salmon swimming upstream. I want to go with the flow. If the market's rising, I want to be long. If the market's falling, I want to be short. Trading's not easy, but it can be that simple. And we only need to ride the coattails of the market or the institutional traders long enough to get our goal for the day and then put the mouse away. That's really keeping it simple, but that requires a lot of patience and self-discipline. Okay? So that takes us through all the markets. Go back to the daily chart. Looking pretty ominous. Okay. Now, as futures traders, we don't care if the market's rising or falling because there's no restrictions on being long or being short. In fact, with futures, you can be long and short and long again all in the same hour if that's what the chart in front of you is telling you to do. With stocks, they've had uptick rules in the past. I think they took those away at one point. I'm not sure if they brought them back or not. But once price moves below this step line, then there's really nothing here major as far as support until we get to this swing low, which is just above blue and climbing, which represents support. So there you have it for this 28th day of June 2022. To get your passport, go to eminifuturestrading.com. That's going to give you access to the live training room every trading day for life. The passport is lifetime membership. Never expires. No recurring fees. No upsells. No gotchas. 9 out of 10 traders fail simply because they don't have a teacher. In any career path you choose, whether it's a doctor or an attorney, an electrician or a plumber, you're gonna have to have somebody teach you how to do the job. 9 out of 10 people try to do the job by watching videos on YouTube. I got nothing against videos. We have over 2,000 on our YouTube channel. Got nothing against books. The 2 books I recommend, both written by friends of mine. Trading in the Zone by Mark Douglas. Read the Greed, Take the Money by Mike Reed. And Read the Greed, Take the Money, I think, is out of print now. But you could probably find one on eBay or someplace like that. So, your lifetime membership not only gives you access to a teacher every trading day, and that teacher is putting on, taking off trades live in real time, explaining every move they make, every trade they take, and the rule behind it. Along with those 2 hours every trading day, you have access to unlimited one-on-one mentoring, the methodology we teach you, the indicators we provide you. Work not only with futures, but all markets, all time frames. Stocks, crypto, forex, whatever floats your boat. As a passport holder, you also receive the Logic 247 alerts around the clock. You receive the concierge trade alerts each evening as they are published. Of course, you always get an invitation to the Thursday night members only workshop. All that and much more. It really is everything a trader needs, all under one roof at one low price. If you're tired of wasting your time and treasure, it's time to settle down, get yourself a teacher, and actually learn how to trade. Now, there are self-proclaimed gurus out there who'll charge you more for 1 hour of their time than we charge for lifetime membership. Because when Michael and I decided to put all this together, way back in 2006, we had some guidelines. We wanted to make it as simple as possible. We wanted it to be a family-friendly, Christ-centered environment. And we wanted it to be affordable. And by the grace of God, it's all come together quite beautifully. All yours, one low price, all under one roof. Now, when you go to this page, it's pretty self-explanatory, but if you have questions, you can call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Also, via our Telegram messaging app, you have around-the-clock support. So whatever you are in the world, if you're trading, there's a good chance one of our other traders is trading as well. And so if you have a question, you just go into the members discussion group and post your question. And if I'm sleeping, and Michael's sleeping, and Valerie's sleeping, and Bert's sleeping, and one of our other members will answer your question for you, because we all learn the same methodology, the same strategy, using the same indicators and the same weekly trading zones. If you've never taken the free trial, everybody gets one, okay? Go to eminitrainingschool.com to get your 1 week free trial. That's 5 consecutive days. So you don't have to start on a Monday. You can start on a Tuesday or a Wednesday. You'll get 5 consecutive days. And during those 5 days, we will treat you just like a lifetime partner. Every tool, every indicator, the discussion group, everything will be at your disposal for 5 days so that you can make a well-informed decision if you do want to become a part of our family. And that's kind of how we feel. We don't consider you a customer or a client. Once you become part of the family, family's for life. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.